What's up, YouTube? Happy Wednesday. Back with another portfolio recap. I was actually traveling, was in New York, and I went by Wall Street and asked for a refund, and the market gods smiled upon me, and the account's up $21,000 over the last week, and over the last month we're up 15K. So we actually reached an all-time high for the portfolio here at 189,992. It really doesn't want to go to 190, but overall I'm pretty happy with this. We'll chat a little bit more on why the portfolio is up so much. If you guys are not aware, Amazon, Meta, Google, and Microsoft are my four biggest position here in this portfolio. I also have a couple satellite positions with ServiceNow, Palantir, Zeta, Robinhood, Marvell is a smaller position. And this is a pretty concentrated portfolio if you guys are new, but we've been seeing some good results. As you guys know, these companies reported earnings last week and it was phenomenal. The market is really liking these companies again. So today I want to talk about where I think they're going to head for the rest of the year, my thoughts on these earnings, what I think of Meta as well, because they reported earnings and they actually sold off a ton. We'll talk a little bit more about that. And there's a lot of stuff going on in this market, so let's get into it. So like I mentioned, portfolio is sitting on 184,400, and we saw basically 190 earlier today with a 1% move. And there's a little bit of a sell-off right now. Google mainly selling off because they have some leadership concerns, and Google is actually selling off a little bit today, and the stock's down 3.4% on the day. And that's, a big move for me because this is one of my biggest positions here on this portfolio, representing 26% of my portfolio. So a 3.4% drawdown represents $1,700. If we look at the all-time chart, I was trading back in 2020, 2021. This is when I first started with this account and taking investing a little bit more serious and honestly trading options. And as you can see, I had a pretty major drawdown, and don't look at the percentages because I've added money to this portfolio. So at the time, $14,000 was around 60 to 70% of the account. So I had a $14,000 drawdown in 2022. I was trading T-Triple-Q, which is a triple leverage ETF that tracks the QQQ, and the QQQ tracks 100 tech companies in the US. So as you can imagine, a lot of volatility, and 2022 was not good for tech. But anyways, I learned my lesson. I don't actually mess with much leverage anymore. And the way I do it, it's a little bit different. As you can see, I found success early on, $3,000 up on the green. I was on top of the world. As you can see right here, I was up $7,000. And this was a lot of money for me. It still is. I would love to have an extra $7,000 if I could. But this was, all of my net worth that I had in the account. So not very long ago, I was trading with, $30,000, $20,000 up until 2023, really, when, everything recovered for, technology in general. I sold off all of my tech positions and my options, and I was running this business for most of this time right here, all the way up to March 2025. Mid-year March 2025, I was running a pretty cash intensive business where I just drew all this liquidity from here, and now I'm back, and it feels good to be back. The stock market is certainly not for the faint of heart, but I enjoyed this game. But anyways, going back to what we were talking about, let's talk about Amazon first and their earnings. So the revenue was up more than 20% year over year, which is just insane. They have this Anthropic investment that is worth, I think, $80 billion, if I'm not mistaken. So pretty big, sizable chunk of money that they have invested into that company. Their operating income jumped to 43%. Their AWS growth, which is honestly the biggest thing and the thing that I was looking for the most, and I think a lot of people were too, their revenue surged 36.7% year over year to $42 billion. And this is the fastest growth they've seen in 18 quarters. So the whole thing with these companies is that they're spending money on AI, and all of this capex is going to waste. But this shows right here that AWS is a major business for Amazon, and it's growing at the fastest pace in 18 quarters. So this is amazing. That was my whole thesis, that this capex investments are going to drive revenue for these companies. But there's a little bit of a lagging thing. They've been building this out for the last 12 months, and they're finally realizing some of those profits. And AWS is their cloud business. To run cloud businesses, you need data centers, and that's why they're spending $220 billion on data centers for 2026. So this whole CapEx story is finally somewhat paying off for these companies in the very early times. Like, if you think about it, this revenue is not even at full capacity yet. They're still building a lot of these data centers, investing money. So very happy with Amazon. They've been very, very neglected for the last, I want to say, like year to 18 months, really. I hold this option contract right here with around 98 shares of exposure, which is represented by my delta. And I was actually up to $6,000 worth of gains, representing around 60 to 70% return on my money. And let's look at Amazon year to date. I think they're finally up into the 20%. Yeah, so they were up actually 20%, 22% back on August 3rd, which was a couple of days ago. And this was an all-time high for Amazon. And super happy because Amazon investors have been beaten up for the last year. Like, look at this chart. We would go up to the 270s, 260s, and then just straight down. Like, look at this, guys. It happened multiple times. This time I finally thought we were going to hit 300. Nope. Then we traded down again. And this time I think we're here to stay, hopefully. I'm actually going to sell off for this contract, and I'll tell you guys what I do with that money as well, because this expires in January of 2027, and Theta starts picking up 6 months before this contract expire. So this is where I have for Amazon. Very, very bullish on the company, and I'll let you guys know what I do with that money. But let's talk about Meta and their earnings. So Meta reported a 28% year-over-year increase on their revenue. So think about this. This is a almost multi-billion-dollar company reporting earnings that are growing 28% year over year. So if you guys don't know, Meta makes 98% of their money from ads. So if you think about it, ads is how they're making money. So if ads are making more money, it means that their ads are delivering more value to people that are buying them. To deliver more value to the people that are buying their ads, they're using, guess what? AI. I mean, that has been my whole thesis, guys. And Meta is a little bit of an oddball here because, one, Zuck has been known to just make all of these investments into the metaverse, for example, and not have it pay off. That, kind of scares a lot of people when it comes to Meta stock. And then two, that they're, not as big as Amazon in terms of diversification of revenue. Like I said, they have 98% of their money coming from ads. Kind of drives a lot of fear over the stock. Like, for example, they have a lot of regulatory concerns in Europe right now. They had to pay more than $1 billion in lawsuits. They paid almost another $1 billion in settlements. Let's see if we find it here. So check this out, guys. They actually paid $2.4 billion in legal and litigation. So that kind of crushed their EPS, and they missed by a little bit. But if you kind of subtract these numbers right here, this 1.1 to 2.4, they were actually beating on earnings on the EPS side. So yeah, I mean, this company's phenomenal, guys. They also raised their CapEx for the next whole 2026. And one thing that was a little bit bearish, and I think why the stock fell so much, is because they didn't provide guidance for CapEx for 2027. So I think they didn't do that because they already had enough bad news here on this report with all of this litigation spend, all of this severance. So they laid off like 15-20% of their workforce a couple of months ago, paid $1.1 billion in severance, which is insane when you think about it. But talking about their ad revenue, which is how they make money, their family of apps and ad impressions grew 14% with a 12% rise in average price per ad. So that's huge, guys. I mean, if you were to work at a company or you had a business and you got a 14% year-over-year increase in revenue and 12% year-over-year increase in part of your revenue, like, that's massive, especially for a company like Meta that are making $15 billion every quarter. So that's pretty crazy. I'm still mega bullish on Meta, and this is not financial advice by any means. It's just what I do with my money. I hold this contract right here, and I have around 90 something shares worth of exposure, 91 shares worth of exposure with this contract. And they traded down like pretty badly whenever they reported earnings. And everybody here on YouTube and TikTok were flaming me for owning Meta. They were like, you're cooked. Yeah, you bought Zuck's company. You lost money. Guys, these people think like in weeks. You have to think in years. Like, you have to understand, like, these companies need time to make their plays and for their investments to pay out. Imagine if you were to work on something and you wanted results in 2 to 3 weeks. Like, I'm sorry, like, you're either going to get shitty results or you're not going to get results at all. If you've done anything in your young adult life, like, you understand that things take a lot of time to play out. Like, if you went to college or if you have something that you do, whatever it is, it takes multiple years to get good at something for things to play out. So have patience when it comes to this kind of stuff. People are always so short-sighted, and the stock market is probably the most short-sighted individual or entity ever, because check this out, they dropped earnings on the 29th or 30th and then they traded down 8%. They were back to 530, and I wish I had more cash to buy up the bottom. But again, phenomenal company. Still very bullish on this position. I hold a couple of shares here, but then my biggest position is, of course, the Leaps contract that I have right here. So let's talk about Google. That's my biggest single position here on the portfolio. So Google's trading down on the day on fears that they're actually losing some of their top talent, and I'll explain why I think it's ridiculous, and we'll talk a little bit more on that. But this is my biggest position. This represents 49,000 basically on this portfolio, which is a lot. You know, $50,000 is a lot of money. And I have a 165 average cost. So any move on this, it's, you know, either a big up or a big down on my portfolio. But let's check their earnings. They actually had phenomenal earnings. Again, Google is a very healthy company. They make $119 billion worth of revenue, and their expectation was 116. They are spending money on AI like everybody is, but they are having a revenue increase of 24% year over year, which is insane. They actually had a pretty high earnings per share number. You know, this is a little fake because they had a pretty big investment into OpenAI, or I'm sorry, into SpaceX, and maybe over here on Google is going to show why. But their revenue is jumping 82% year over year to 24.8 billion when it comes to Google Cloud, which is GCP, their cloud business. So this is awesome. So it's clear that these businesses are growing very fast, 82% year over year. And prior to this, they were growing at 60% or 40%, whatever it was. So quarter over quarter, these things are growing massively. So, I mean, it's really cool to see. The revenue is growing at 17% clip, $63.3 billion. So it's evident that AI is, you know, helping these businesses. Of the market has been AI in the last 5 years, in the last, honestly, 2 to 3 years. And it's clear that these companies are benefiting from it. And we've seen a little bit of a shift back into the hyperscalers when it comes to momentum, which I think is really cool to see because, in my opinion, they're the highest quality companies out there right now. But let's talk about their CapEx expenditures. It's in between 195 and 205, which is what we expected, 200 billion around there. So like I mentioned, another phenomenal earnings report here for Google. Very, very healthy company, trading close to their all-time highs. I want to say, like, they're trading at 382, which is getting to the 400s. I think their all-time high is 402. So we'll see what happens. I mean, Google has had a massive run this year already. I mean, 15% run is insane. They were trading down to actually being flat not very long ago. So if you bought this dip right here, you're pretty happy. And of course, the March dip was just egregious work. If you look at the 1 year, they're still up 87% over the year. And to those that bought the dip and kept buying more, even if it was dipping and more shares throughout, you know, these moves, you're benefiting from it. I mean, I have a 165 basis, and I was buying this back in April of 2025. So if you look at right here, Google was already trading at somewhat of a premium at 204. Like, during this time, Google was facing a lot of backlash over their search business. They're actually being sued by the Department of Justice as well on their Chrome business. They were trying to divest Google Chrome from Google. They were calling it a monopoly, and they of course lost over that. Everybody thought that Google Chrome and just search in general was going to get replaced by AI, and this thing was trading on 145. And it has been one of the largest growth companies in the world this last year. And that was always a thesis, guys. I mean, it's Google. Where do you think they're going to go? People are like, they just forget how innovative these companies are and how the narrative can flip so fast. Google, phenomenal company. Not financial advice, just what I'm doing with my money. Exactly $49,000 worth of my money. And last but not least, probably the biggest surprise here on my end, at least, is Microsoft. They were actually up a lot these last couple of days. So to be exact, they were up 22.6% in the last week, which is just insane. And we saw a couple of a percentage drawback right here, 497. So maybe we see all-time highs for Microsoft before year end. I can certainly see that with all of this momentum coming back to it. And that's really cool because this is a now $51,000 position for me. And I have a 408 basis that I've been talking about this company for months. I was accumulating all throughout the start of the year and whenever we saw dips. And that's why I have a 408 basis, and I wish I bought more and I wish I bought at lower prices because this company was so beaten up for no reason. And in just a week, I already have an $8,000 return. So really cool to see Microsoft gaining some momentum. And let's talk about their numbers. Their cloud business is up 43% year over year, which is their Azure business. So that's really cool. Their revenue's up to $90 billion, up 18% a year ago. So year over year, really cool as well. $35 billion in net income, a 31% increase. And you know, this is a phenomenal business, guys. Like I've been talking about why Microsoft is, and I think it might be still a very good buy. They're not trading at a premium by any chances of the imagination. They have hundreds of billions of dollars of cloud revenue already booked for them. So, you know, this is a fantastic company, and I think the market is finally understanding what they're about, and a lot of momentum coming back into the hyperscalers, and that's why the portfolio reached an all-time high. And I can see this going much higher if we keep seeing positive momentum towards these stocks and then reporting good earnings as the future comes. And honestly, Meta is kind of the dark horse here because this is my biggest position when it comes to notional value, just because I have leverage with this options contract right here. So if you were to look at the actual contract, I have $28,000, but when it comes to the exposure, the notional value I have by holding this contract, I actually get exposure to almost $60,000 worth of the underlying. So as you can imagine, if Meta goes up 10, 20, 30%, that's a significant return here for the portfolio. So with the portfolio update aside, let's talk about some recent news. And like I mentioned, Google stock is dropping because AI researchers are leaving the company. And this has been like a news cycle that has happened probably 3 times with Google. It happened with Amazon. It happens with every company. Like Meta is the same way. They go and trade down because their AI researchers doing whatever. Like, you have to understand that these companies are winning, and I think these companies will win in the future. It's because of their distribution. Let's take Meta, for example. 3.6 billion active users. So users that go on their platform almost every day, if not every day. 1 in 2.2 people, or almost half of the world, uses a Meta platform. So think about the reach and scale they have. Think about Google search. How many search queries are done every day? Think about all of these different things that Google does with Gemini and Microsoft Copilot. They own 85% of the Fortune 500 with Office 365. These are millions and millions, tens of millions of enterprises that own Office 365, that own Copilot in their business, and extremely sticky. I mean, I could go on and on, guys. Look at the distribution of Amazon and AWS. It's just insane, guys. The distribution is what's gonna have these companies win in the long term, and not the models. Because you see Jensen Huang, you see the guy from Anthropic talking about how open source models are actually super beneficial for everybody. So the models are getting commoditized. The idea of having the best model is not necessarily the golden goose anymore, because you have someone from China come around with DeepSeek or Kimi K3 saying that they can do the same things for a lot less. And it's probably not true, because if you look into Kimi K3, they actually had a lot of copy code and logic from Anthropic's model, Claude. So this is just my idea, that I think these companies will win in the long term because of their distribution and their massive scale, and the models are going to get commoditized. And that's just my take. And that's why I'm invested into the companies I'm invested in, and not necessarily into the semiconductor stocks. Although I think that's still a great trade. These companies are phenomenal. I've talked about them multiple times here on the channel. I just don't see myself owning them for the long term. So again, I think these news are overrated. So this is my take on this, and I'm not scared at all. I'm not selling a single share of Google. So SpaceX was the stock of the moment for multiple different months ahead of their IPO, and they had a pretty big pop at IPO. I think they were trading up 20-25% throughout that last couple of weeks, honestly, until they came to their IPO price, and now they're trading under their IPO price. And I've talked about this stock too, guys. I didn't buy into the SpaceX IPO. I mean, I have one share just for the fun of it, but I thought this company was extremely overvalued, and I think the market is finally getting a breath of that, because they don't make as much money and they have a $1 trillion valuation. And like, I understand, like, this is a future commitment, future company that will succeed, and I have a lot of trust in Elon Musk. I'm actually a big fan of what he does, but like, just like Tesla, like, I'm not paying a premium for whatever they're doing, for whatever revenue they're doing. So let's listen to the Yahoo Finance guy talk about SpaceX and his take on it.
Shares trading for an enterprise value to EBITDA ratio of 105.9 times per Yahoo Finance Alpha Space data. Love Alpha Space. The outsized ratio reflects Wall Street optimism that SpaceX will turn a profit in 2027 due to strong demand for its Starlink services. Speaking of optimism, of the 34 Wall Street analysts that cover SpaceX, Alpha Space data shows 27 rate the stock a buy or a strong buy.
So you guys are hearing it from the media, and I don't take the media into, or anything, honestly, when it comes to analysts, into much of concern or into heart, really, because they just have their opinions. I have mine. But Brian Socci, this guy from Yahoo Finance, is talking about how SpaceX trades at a very high multiple to their revenues, which they don't make much money right now. So anyways, they're talking about how, you know, they might turn a profit in 2027, and they're now trading 10% down on Wednesday, back to 116 to their high of about 225. So this is just a big trap, guys. This happens here and there. Like, you look at IPO companies, it's actually very difficult for big IPOs to perform well after the IPO. So if you go and study that, you will see what I'm talking about and how price moves. But anyways, I'm a big fan of SpaceX, like I mentioned, but I'm not necessarily a big fan of their valuation. So hopefully you followed the channel and didn't fall into the SpaceX trap. Maybe they will turn into a massive company in the future, but right now they're not doing so well. And oh yeah, it's right here. I mean, we just talked about it, how all these IPO companies trade on a premium once they IPO a lot of times, and their year one max drawdown, look at this, guys. This is 90% for Robinhood, which is insane. And you know, Robinhood's a little bit different. I mean, every company here is in a different industry. Like Rivian's in the automotive space, CoreWeave's a data center, SpaceX, like we just talked about. Like, there's all kinds of companies. DoorDash, Palantir's a software company, Datadog software. So all kinds of different industries, but you know, Okta, cybersecurity. But the thing here is there's going to be a lot of volatility, and which one is it going to go to? Is it going to go negative 65% like Coupon or Roblox, negative 40%? Robinhood right here has turned around for the good, and they were trading 74% down on the 12 months after IPO. So this is my idea with this, guys. Hopefully you avoided this trap, But this is what I got for today, guys. Portfolio trading at 184, 467. We're going to see 200K very, very soon here if momentum continues, but I'm very happy with these positions. I appreciate you guys being here. Don't forget to leave a like and subscribe. Leave me in the comments what you think of this episode, and I'll talk to you guys soon.